Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. The Federal Reserve held rates unchanged at 3.5% to 3.75% in what appears to be Chairman Jerome Powell's final meeting before Kevin Warsh takes over May 15th. But the real story is what the Fed changed in its language. The central bank removed the qualifier somewhat elevated from its inflation description, now simply stating inflation is elevated. That hawkish shift rattled markets and pushed rate cut expectations to just 44% probability for all of 2026. Bitcoin sits at $76,000, down from highs near $79,000 earlier this week. Ethereum trades at $2,260, and Solana holds at $83. The pullback came as three Fed governors dissented against easing language, the most divided vote since 1992. Meanwhile, oil prices surged above $100 per barrel as the UAE announced its OPEC exit, and Trump rejected Iran's proposal to reopen the Strait of Hormuz, adding macro pressure to risk assets. But institutional adoption continues accelerating. Meta launched USDC stablecoin payouts for creators in Colombia and the Philippines, powered by Stripe on Solana and Polygon. This marks Meta's return to crypto payments after the failed Diem project. Visa expanded its stablecoin settlement program to 9 blockchain networks including Base, Polygon, Canton, Arc, and Tempo, hitting a $7 billion annualized run rate with 50% quarterly growth. On Capitol Hill, Senator Tom Tillis announced he'll push for a markup vote on the Clarity Act when the Senate returns in mid-May. The stablecoin yield disputes have been largely resolved, removing a major roadblock. However, ethics provisions targeting executive branch crypto holdings remain unresolved. Pump.fun ended its 9-month policy of burning 100% of revenue, shifting to a 50-50 split. During those 9 months, the Solana meme coin launchpad burned 36% of Pump's circulating supply, one of the largest single-event reductions in crypto history. The token jumped 7% on the announcement. Bitcoin ETF flows turned mixed after a $2 billion inflow streak. Spot ETFs saw $490 million in outflows over 3 days, led by Fidelity and BlackRock. However, institutional positioning remains strong with nearly $58 billion in cumulative inflows since launch. Wall Street is launching the first prediction market ETFs next week. Roundhill Investments will debut 6 funds on May 5th tied to US political outcomes for the 2026 midterms and 2028 presidential race. Bitwise and Granite Shares filed similar products. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.